Okay, guys, let's start the seminars. All right. Okay, what we were expecting all week, U.S. dollar strength. Okay, the U.S. dollar strength is here. Unfortunately, the 139 order didn't get filled. So do not matter. I mean, I hope that many of you guys catch the move on the individual basis and not on the order that we send. So, but anyway, it was very clear. We were expecting U.S. dollar strength. The strength is here. Now, what we're going to do first, like we do in every seminar, is we're going to try to, present all the risk assets, and you guys can see how they are operating, because as you guys know, there are more risk assets than risk of assets. Risk of assets, you only see like, in risk of, you see the dollar and the yen, sometimes gold, or the dollar Swiss, but technically the dollar and the yen. Now, the risk on assets is when you see more pairs and more indices acting as it. So we're going to start with the S&P. This is the S&P 500. And you guys can see a 5 swing. 1, 2, 1, 2, 1, 2, 3, 4, 5. Very clear on the daily basis. You see a move high to around the 618. You see this move here, 3 backs, and most likely now it's going to be continuation to the downside. So far, so good. Now, let's reduce the S&P a little, the S&P to around the 240 charge. We know right now on the S&P, this move is a clear-cut corrective move. I have no question about it. The recovery, always we were expecting a corrective move, and we were expecting in a recovering of the corrective move. We were expecting all the week that this low needs to be broken. That's what we are expecting on the S&P. Well, so far it hasn't, but it needs to be broken, even in the most bullish of the cases, in some degrees. Now, having said that, you're expecting the S&P to at least make a run at 1175 or 1200 area. So it hasn't taken that. So that's why we're still favoring more outside, most likely on the dollar, unless this is going to be the biggest surprise at all. 1, 2, 3, 4, 5, something like that. And then it's going to go higher from here. This decline on the S&P is questionable. I got to admit it, even in the closing, in the close line, you don't see as a 5. It's very questionable. But well, this is more corrective than this. So the worst of the scenarios, I'm expecting S&P to break this low if that's the case. Now, what we're going to be is adding risk access to the S&P chart. It's very clear that from here, we have a 3-way. So let me be adding to start drawing conclusion on what do we see about the risk trade in general. We're going to start with the Aussie yen. The Aussie yen, a huge correlation with the S&P. And the Aussie yen, it makes a new low already below the equivalent of this low on the S&P, but at least in my eyes, it looks corrective to the downside. I don't know about what you guys think. For me, it looks corrective to the downside, at least. Exactly. Unless in this chart, the Aussie yen, look the correlation with the S&P. Very well correlated. But the Aussie yen in this move, on the 3-way move right here, it looks corrective. Right here, also it did a three-way. So, like I say, the move in Aussie yen from this high looks very corrective. In my view, it looks corrective. So that start thinking that at this stage, each one of you should have. An S&P can crash? Yes, absolutely. And the overviews have been reflecting the view that we have, that you got to attack the dollar either on the seaway or in the real move. And then the market is going to be let you guys know when we really are with more data. Remember, I always say this, forecasting or trading is not thinking, not trying to outrun the market. Forecasting or trading is more knowing when the next 24 hours of trading or the next 48 hours of trading is going to be, subdividing the market using Elliott Wave in two things, correction and impulse. We all knew since last week that the dollar, it was into a correction, that the levels that we were expecting didn't get reached happen most of the time. Why? Because the market maker, they are not stupid. And time after time, traders, retail traders, we fail to understand the concept. And you wait for the right level to happen, and they left you out of the market. We are very conservative traders in Elliott Wave forecast in the public side, but that correction that happened, it was easy to call. We were calling the highs and the lows within the correction almost to the pit on the rune. And if I was on the other side of the equation, I always say, when you have a corrective move, throw yourself in and wait for the market to do the solution of the correction. That's the way it's being traded. So it was very easy. Now, when we are is in the definition, when the market needs to define if this is a B way or we're going in a C way higher, or we're going with a real move to the downside. Now, let's keep going. We have the S&P and we have the Aussie yen. I can be wrong. No, it won't be the first one or the last one, but I have 8 monitors in front of me as right now. I was talking to DB this morning, and I was telling DB that Aussie dollar also looks very corrected to the downside. I'm having a lot of issues trying to label both Aussie dollar and Aussie yen and impulse from here. Yes, I know that a not so deep waiver can label 5 swing in the Aussie yen, but that waiver is forgiven or is not seeing that the last leg down is in 7 swing. The same happened with the Aussie dollar. I know that type of waiver, but well, that's what I see right there. Now, let's keep going, and let's put now copper in first place right here. And this can be the hint, guys. This can be the hint in copper. Like oil was showing the first move, copper can be showing the second move. Now, we say, and this is how we trade, we say that the dollar is going to get strong based on the idea that from here, copper did 1, 2, 3, 4, 5, 1, 2, 3, And we knew that copper needs to do at least break this low. Like right now, we know that anybody have, no, the voice is all right, it's all right, Mohammed. Everyone is listening to me, right? All right. So we knew that copper needs to trade lower. Copper trading lower mean lower risk, mean higher dollar. That was a given for the week. Everyone should have done picks this week because the market was very clear, and outside that some levels have not been reached, the market was clear right there. Now, what is next? What you can see in copper, how can be laboring? That's the big question, and that's going to be a huge topic of this seminar. It's very clear here in copper that you have 1, 2, 3, 4, 5, A, B, C. That's a given at this stage. 1, 2, 3, 4, 5, A, B, C in copper. Now, is this a B-way triangle? I don't see it like this. I see it more like an ABC, most likely ended here. But at the same stage, I see that this move onto here is most likely a nest or a three-way. I see three ways here, very clear, and this can become a three-way. Now, but you have a 5 here. You have a 5-way swing right there, meaning that this is a 5. Any breakup needs to be in 5. So you have to come and you have to say either this is 1, 2, 1, 2, breaking lower in 3, but at the same time, you see from here, most likely 1, 2, 1, 2, 3, 4, 5, 4, and that move from here should end with another low. So you have a 5, and then you say, all right, but you have no extension. You have no extension on it. It can be, this cannot be labeled a triangle. This cannot be labeled a triangle because the only way is ABC. This is AB, but the C is not there. So this is the end. The given here is A and B. And then this is telling you that copper most likely is going to keep trading lower in some degrees. This high is the same as this one. So, I mean, cannot be a triangle because you cannot go and say A, it cannot be a triangle. It needs to trade lower. That's telling me that risk most likely is going to go off for a little bit longer, but that also is telling me that the dollar most likely is going to be strong for a little longer. Now, this can be, I mean, it's very hard right here. I think that the best way looking at this as a 5 swing, which is what it is a 5 swing. You have to think about it that this is a nest. 1, 2, 1, 2, and lower, unless it's a flat. And then you have A right here, B, C, this is A, and then you have 3, 3, and 5 in a flat to make B, and then it goes lower. That's the only scenario possible but that scenario was explained into the video in the euro that we did. I hope everyone watched it. So, in conclusion, that flat scenario goes pretty good with the dollar, goes pretty good with copper, and so on, but doesn't work that good within the S&P. So those are the two paths that you need to follow right now. Either is a much lower correction within the dollar, or it's a flat, or there is the scenario that we present, because technically you got 5 swings here. Now, it's not usual in Elliott Wave that you get a diagonal A or overlapping A and a diagonal or overlapping C. That's not usual in Elliott Wave. So what I mean with that is that there is the remote scenario that this can be 1, 2, 3, 4, and a 5. That's not usual in Elliott Wave. So at this stage, my best advice to everyone is this: wait for 3 ways to see how they react. But copper is telling either a nest to the downside in a way of 1, 2, 1, 2, and then breaking lower here 3, 4, and 5, and on to the equal legs. That's most likely what copper is saying there. In other words, that something like this looking for around this area, copper, but if it's the nest, it is 1, 2, 1, 2, and it's breaking lower now. That's going to be, I mean, that means a biggest risk off into the market. Now, taking a look at copper in the daily, I want to remind everyone that our view that we've been saying that the dollar should be bought no matter what it is. In the day, it should be bought no matter what it is, because we were thinking the idea that minimum a move to 78 was in the book. We always knew that, and we still keep the same bias, dollar strength. Now, I want to remind everyone that the only risk assets, in some degrees, the only risk assets that they are not supporting the idea of a breakout in the dollar are copper and cable. Now, why copper? Copper only because only one reason. Copper, this is the daily copper, and copper can be seen like this from this top. You can make the case now that you have a flat. You can see 5 swings from here. 1, 2, 3, 4, 5. So that's a given that those are 5 swings. Now, you can make the case that you have a flat, and this is wave 4. I don't like it. Why I don't like it? Because the only clear 5-way move is this, and I won't label this a truncation or this a truncation. That's just me. Now, from here, you have A, B, C, 3, and another A, B, C, because you can count a 5 clear swing right here. So you have a 5, you have a 5, and you have a between. A between looks like it did another 5 here. So you have a 3, 3, and 3, and then this, you can count the swings. 1, 2, 3, 4, and then you can count 5 and 2 here and an extra swing here. So most likely, this is corrective also here. When you can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 swing. That's corrective. So I was betting that this is A, B, C in a flat A wave, and I was expecting higher prices. But well, like I say, we just finished seeing a small B wave telling me that everything is possible. That being the case, I won't deny that there is a possibility in copper to trade lower. My preferred count, again, is a test around these areas, a test around this area in copper, which is around this or this area, and then from here another leg higher in risk. That's why we are still favoring the idea of a seaway within the market in risk before another leg down. Now, but I want to be clear about this, that there is a possibility of the breakdown in risk. In other words, the risk of take over the market, but it's not defined completely yet. That's what I want to say. We're still favoring the idea of a seaway higher, and the reason also is cable. Cable, I'm going to put the chart on cable pretty soon, is well defined. And that's the type of trader or the service that we are. We are going to say right now, the war is coming to the end. I believe that any member of this service knew since Friday that any move into the outside in risk is going to be corrected. And I hope that everyone should be creating position or buying position in favor of the dollar. Now, that's about copper. Let's move on to another risk asset, and then this is the biggest one on all, which is oil. I say the biggest one on all is because the idea that oil is being very strong, very strong. One second, Mohammed, I'll answer your question right now. Give me 1 second. Oil is being very strong, and being that strong as it is amazing. It's been, every risk asset has been fallen down, and oil keep moving out. Now, this is oil on the daily chart. You can see now, and now it's getting interesting because there is overlapping here, but this can be the case that oil from here just is finishing a three-way move. That's the preferred count. When you have 1, 2, 1, a flat 2, 3, 4, and 5. That's how we're laboring. That's how we're laboring oil. Oil, we were right when we say around this area that the bound was coming because of the equal legs. And we were right on the pit right there, and that's exactly what happened. We were calling oil to 195. That's what it is. So oil is very risky to me to say to you guys now, oil is going to keep going higher. It can. I don't deny that. It can. But I would say that in oil, as of right now, it just made this move right here in a small time frame it makes from here a 1, 2, a 3, a 4, and a 5 swing. So the flat scenario in oil is out of question. The flat scenario, remember that we were presented in as an alternative, it is out of question. So it's very interesting how things been developing during the last 24 hours. Now, this is the low in oil, as you guys see it, and then you can count that this is A or 1 and B, and from here you can label this as 1, 2, 3, 4 as a 5. So you got a 1, a 2, a 3, but I want you guys to think about it on this. Don't you think that that's a very big wave C in some opinions? Because I was thinking about it when I was preparing. It was it's all right. Went to the 1.236, but it's a well-defined 5-way swing. So this is another element that is telling you that risk aversion in some degrees even into the real move, or even in a corrective wave is going to enter the market, or it is at the market for the next, I would say, 48 hours. Why? Because the most bullish of the counts in oil is a 3-way move into wave 4, and this was a wave 3. That's the most bullish of the count. Otherwise, let's say if risk is going to keep going higher, oil needs to do at least a 3 deep wave to the downside. So, I mean, as of right now, in conclusion, I would say this: more risk off is coming. And if you have already a position favoring the dollar, don't close it yet. Because I believe that more risk off is coming. Now, very key right here is this element, this part of the equation right here. This is the oil on the 60-minute chart. You can make the case like 1, 2, 3, 4, 5, because it's a wave 1, or it can be overlapping, and then this is 2, and then from here you can make the case. Don't know how that this makes 5 ways here, because you can see the 5 swing. Maybe it was a diagonal. It's a well-defined diagonal there, or channel. Can be the case, but it looks clear that that was, in some degrees, a wave 5, either from here, most likely from here. No matter, I don't know what you guys think, that from here a cycle ended there. 1, 2, 3, 4, and 5. You can see the retracement, that low, it was the 50% of that one. And it's this looks like a wave 3 right here. There is separation in some degree. If you labeling as a flat, there is separation, but it's very vertical right here. It's the most vertical move out of the whole move. I tend to believe that that's wave 3. And then, like I say, the worst case scenario is a 3-way back from this high. So oil is not saying too much. It's a very, very iffy market, but you should favoring the dollar. That's my view. you should favoring the dollar. Now, we have covered already oil, we have covered Aussie yen, we have covered S&P, we have covered, let's cover one thing, is Aussie yen by seeing candles instead of a closing line. One second, let me take the other one away. Aussie yen, yes, I know that many people is going to call this a 5, and I don't say no. I don't like it, to be honest with you. I don't like it, because for me, I don't like it because for me, it looks like a 7-way from here. Right here looks 7-way. So, but well, at least you should get 3 swings down to the downside. 3 swings down to the downside. Maybe this is 1, 2, 3, a flat. It reached only the 38 or 2. Maybe you end in a cycle now. But like I say, you should keep favoring the dollar yet, and to prove you wrong. That's my idea. That's what I really think. I think if this is a trap, that trap is not ready yet to bust higher. You can see, you can see that there are pairs supporting a flat, possible. A flat can be the case, possible. But I don't know for what reason. I know outside of cable, and we holding the buyer that this is a big way on the dollar only because of cable and copper that didn't reach too high. Otherwise, I'd be saying this, guys, you got to play that the breakout in risk off can be taking place. That's my feeling. Now, let's put cable right here. Let's put cable for a second right here, because I don't want to get into individual pairs without finishing my presentation here. But like I say, I really do believe that we are here I'm favoring, and I want to be clear, guys, one more time. I'm favoring the idea that this is way C, of, I want you guys to understand, I'm favoring the idea that this is way C of B, what is taking place. Now, that idea can change in a bit. Now, this is cable. This is cable. Let me put the weekly. Why are you playing in cable? A weekly triangle. When you have A, B, C, D, and possible E. My favorite scenario is a B right here and higher. That's my favorite scenario. Now, why do I prefer this scenario? Now, this And I want you guys to understand, this move can take the euro, which is popular, to 133, to 132 easily. That's what I'm trying to say. So you guys understand. If we break lower, break lower. Now, why do I base this? Because if this was already wave E, he's breaking from a triangle. He won't break for the triangle in a corrective wave. He's going to break from the triangle in an impulse. Now, that means that the first leg out of the top on E wave should be a 5-way move. If you go to the 60-minute chart in cable, let me see. If you go to the 50-minute chart, to the 1-hour chart in cable, right here, it looks like it did out of the top, it did a 3-way move. Now, it can be an irregular wave too. When you have 1, A, B, C, 2. That's what I say. Don't roll, don't run before you work. Now, best scenario for the cable trader, if you don't cash it right here, it looks like from here you have 1, 2, 1, 2, 3, 4, 5. This is wave 3 and the 4 and a 5. Best case for you guys, that the low is not broken, and then it retraces, and then you can sell here against this high with a complete insurance that the continuation to the downside is going to happen. Now, if you take a look to the move from here to here, I can count, guys. I don't know about you. I can count 1, 2, 3, 4, 5 swings to here, a 3, and another 5. I can count 3, I can count 5, I can count 3, and then 1, 2, 3, most likely 1, 2, and then from here 1, 2, 3, 4, 5, 6, 7 swing in this wave, and then most likely that's not the diagonal C wave. Why do I say that? I know that some people have it because I've been saying it. I know that I told Dina about it. At least Dina, I know that I told him about it. Everyone was shooting from the 76.4 that comes at 161. At 161, remember guys, I say that I like 61.30. You guys remember? The reason that I say that is because 61, that level right there is equal legs to the pit. Right there. A, B, C. That's telling me that this is a 3-way move. You guys agree? James, you like it as a 3, right? So, if that's the 3, Divi, you like it as a 3, Isa, all you guys. If that's the 3, yes, I believe that the 8 ways done, Rafi, yes. If that's the 3, guys, if this is a 3, guess what? You got a 3 coming here. So this is W, this is S. And this is what's going to happen. Let me get big again. You got WS, guess what? You're going to get 3 here and another lower to around here in cable, and from here cable is going to bounce higher, which is telling you that this is a 3, the move in the dollar is a trap. Because coming out of the triangle, you cannot come out in a 3-way move. Maybe I'm wrong, I hope so, but that's what my common sense as a waver is telling me. And I believe that the dollar is ending, in my best case, I believe that the dollar is ending wave A of, I believe that the dollar is ending most likely as a preferred count. But I want you guys to listen to me. The dollar, any 3 ways back in the dollar at this stage should be bought, in my opinion. I think that is a remote case that the flag can be in place. It can be. I don't deny that. So you got to be smart. Now, when you see the A way in the dollar, that's your opinion, Rafi. I respect it. Possible. But that's only looking at the dollar and cable. When you see the 3-way right here, but cable is showing the path, if you guys have no idea right here. If you guys follow market correlation, cable is showing the path, if you guys have no idea. This is a 3-way move. This is a 3-way move right there. And my advice is, when the market correct now in 3, guys, sell cable and buy the dollar against every major. In my opinion, that's what I believe is taking place, in my opinion. Now, let's move on to individual pairs. And I'd always do at the beginning of the seminar this correlation sheet, because these things not only is an education to you guys to how to see the market, is also it proves that not only a trader can be a single currency trader. He needs to trade more than one pair. Now, when we move Rafi to individual pair, I'm gonna let you know. All right. Now, let's move on to the individual pairs for the bit right here. 1 second. I think that you guys should follow the 2 pairs that are very interesting, or 3 indices that are very interesting are cable, dollar cat, copper, and in some degrees oil. The rest, I believe, in my opinion, is gonna follow whatever all those 4 risk indices they're gonna do. That's, in my opinion, what's gonna take place right there. Maybe am I right? Maybe am I wrong? But that's what's telling me the market that is gonna do. Let's wait here a little bit. I still believe there is more downside within the dollar, more upside in the dollar. Okay, this is New Zealand. New Zealand, Very interesting. Again, it did a 5-way swing here, and it looks like complete right here. It can be, it's hard to say sometimes what the market is doing with an 100-degree. But look, guys, even if you want to be a dollar bull right here, you can see 3 swing to here, but it's lacking momentum at the stage. Of course, momentum can be created at any moment, and that's how sometimes the 3 ways become a nest, and I agree with it. Now, like I say, cable is telling me that it can go, that it's going to keep going lower. In other words, the dollar is going to keep going higher, but I still question about the idea that is the real move. Now, New Zealand can be doing this, can be done right here, and maybe it did like a type on irregular, and then can be trading lower. That's one of the scenarios in New Zealand. The other one, I believe it was a flat. Like I say, the flat is present in many of the pairs. Look, A, B, C, A, B, a B-wave flat and higher in 305. That's possible. Nobody can deny that, in my opinion. That's for New Zealand. Let's keep going over most of the pairs. Let's go to one of the most interesting one, the dollar CAD. Look at the dollar CAD. Look at the dollar CAD. You can label it as A, B, C, W, S, A, B, and there is no question in my mind that this move was a 3-way move. You guys agree? Rafi, you're the dollar CAD guy. You see that as a 3, right? So if that's a 3, that's denying the bullish CAD. That doesn't mean that ain't gonna go higher. It will go higher. Because you know where we are right now? We are entering we are right here to the outside. That there is more outside in the dollar CAD? Most likely, yes. 103 can be in place. 104 can be in place, even around that area. But this doesn't look, I mean, you can make the case and say, let's make a nest. If we break higher, you're going to make a nest, but too many nests. Because you have already 1, 2, 1, 2, 1, 2, 1, 2. How many nests you going to have? So it's contracting right there. This cannot be a triangle. So it's like copper. It's contracting to the outside on the dollar CAD. It's contracting to the downside in copper. Even Australian dollar is contracting. Contracting market there is very dangerous. Why? Because it can open out, and I see, and that's what I say many times. I have seen, I had no question in my mind that CAD is going to trade higher, Rafi. But like I say, contracting market is very dangerous. That's for the CAD. Another one, I'm sorry, pointing out like a red flag. Now, let's keep going. Let's go to the euro. Let's assume And this is when it's getting interesting in euro, guys. Let's assume, and this is key, and then if you follow the rule, I know there are people here that they don't follow the rule. I've been questioning, and I've been questioning for a while now, if this is a 5 or this is a 3. Because if this is a 5, this is very interesting. Because if this is a 5, then you have 1 of A, 2 of B, but I can make the case with a higher degrees of insurance that if I put in euro, let me put the RSI on the 5-minute chart, I can make the case very with a higher degree of insurance, like I say, that from here you have 1, 2, 3, 4, 5. This is 1, 2, 1, 2, 3, 4, 5. This is 2. This is 1. And in regular wave 2, I can make the case 3, 4, 5. I can make the case of this, that from here you have 1, 2, you have 3 to the 2618 right here, 4 and a 5, all right? And then from there you can make the case that this is 1, 2 to the 618 right there, almost to the extension. You can make the case that from here to the 23.6 you got a 4, and now 1, 2, 3, 4 and another low to finish. We're gonna go there to finish 5-way swing from here. Don't you guys see 5-way swings there? Very clear, right? So getting back to the higher degrees, what you got in the euro, it has to be either 1 of A, 2 of B, or is nesting to the downside. A client referred to me to be 1, 2, 3, 4, and 5. It is possible. I don't like it 100%, being this too big in time compared to this. Time, you need data to assess that scenario, which is 1, 2, 3, 4, and a 5. You need data to assess that scenario. Now, you have to see the recovery from the next low. You have the divergence on the low, which is possible. I don't deny that this can be the 5-way from the lows. I don't deny that scenario. It is possible right there. If it comes from here, I can say, you guys, that's a 5-way. Because I really, really believe, and I know that I have such an issue for calling this a 5-way that you guys have no idea. I would rather call this W, S, and then A, B, and C. Because this W goes pretty well with cable doing his W. I know it was fast, but the RSI is telling me A, B, C, W, S, A, B, C, Y. Look, that's what my RSI is telling me. So if this is W, this is what we're going to get. 3 back to around 137, and lower to 134. That's the one you like, Isaac, SAG, right? Time-wise. And that's what I think. You guys see it? That scenario. A, B, C, W, S. I know you do. A, B, C, W, and then 3 backs and lower again. And that goes with cable, that goes with copper, that goes with everyone. I know. That's what I think. That's what I think. Now, let's take a look to the dollar, to the euro index. Interesting. Euro index is testing the 618 of the previous one. Now, if you take a look at the euro index, guys, look, from the lows, don't you see 5 wicks? 1, 2, 3, 4, and 5 in some degrees? And then you need 3 backs around 104. Around 104. Now, let's go a little more right here. This is the 4 hour. When you go to the 4 hour, kind of, you see 1, 2, 3, 4, 5. And then right there, you also think 1, 2, 3, 4, 5, 1, 2 here, and then 1, 2, 3, 4, 5. I see 3 ways onto here. 3 backs, and then more likely, like the euro, the only difference is that it did a triangle in the B way, A, B, C. But I don't know. I'm going to get very deep into the euro index when the seminar ends, because the euro index can have 1, 2, 3, 4, 5, a triangle B, and a 5. If this is a 5 on the euro index, that means that we're going for 134 and higher, in my opinion. I challenge you guys, the good waivers, to take a look. Let me see one thing. To take a look at the euro index. You guys can get it for free. What is the name? An Admiral Market. I'm going to put the link so you guys can take a look at it. Look, 1, 2, 3, 4, 5. This is 1, 2. And then from here, 1, 2, 1, 2, 3, a 4, and a 5. This looks like a 5. This looks like a 1, 2, 3, 4, 5, a 4 in a triangle when you have A, B, C, D, E, and 5. You see in it, ISA, right? And this looks like a 5. And then from here, looks what you got. 1, 2, most likely 3, 4, 5, 3 backs, and then 1, 2, and then you have more downside, because you see in the index. That's a good point. That's a valid point. The thing is that I don't see the triangle in the euro index. I don't see the triangle. Anyway, we're going to have the same result, you and me. Doesn't matter. We're going to have the same result. But I'm trying to play because I don't see the triangle as well defined as it is in the euro index. In the euro index, looks like a clear 5-way move to the upside. You agree with me, right? I mean, it's very clear. The trust for the triangle is very clear. And that, that takes me to the idea that the euro index is going to bounce higher. from around this area right here, around 104 again, higher. Now, that's for the Euro index. Let's move on to the individual pairs again. And let's move on now to another Euro pair, which is the Euro Yen. And wait, data sometimes kind of slow. One second, guys. The Euro Yen. I don't know why sometimes the yen pairs, they delay the data like you have no idea, guys. Let's wait. We have no choice to wait. So, I mean, I'm going to go very deep into the Euro index. But no matter what it is, guys, more downside is coming into in favor of the dollar. Now, this is the Euro Yen in the 4-hour chart. You have to see what you have. You have a possible three-way move to the outside. Most likely, you go to the RSI, high is the high, so that was a three-way move to the equal legs. To the equal legs right there. That's very clear. Now, the downside looks corrective in the Euro Yen, in my opinion. The downside, at least questionable in the Euro Yen. You guys can see when it comes to the first leg, what you guys see. You see, most likely 1, 2, 1, 2, 3, 4, 5. You have a complete cycle here from here to here. And then you have 1, 2. You're going to see to the 2%, and then 38 or 2. But then this decline from here to here looks to be a three-way move. The RSI is saying no divergency. So that means that for me, not having divergency always is a red flag. Now, if you divide it, you see that you can say ABC, WS, ABC, Y, and you try to make sense with the figures on the highs, on the lows. It's pretty close to the equal. It's very questionable. Now, right here, you have to put the RSI, and you see, as of right now, that you're getting a read of 22.48 here and a read of 20 or 19 here. So it's lacking momentum as of right now. You did a three-way back right here, and from here it's calling 1, 2, 3, 4, and a series of possible next to the downside. So the market is telling me one thing, but you can label this as a B-way triangle in some degrees. When you have A, B, C, D, E, and then trusting from here. it also, you look from here, 1, 2, 1, 2, 3, 4, and it looks like in a small time frame, from here you can see 1, 2, 1, 2, 3, 4, 3, 4, like it's lacking momentum and a bounce is coming. So either is a super nest or this is a double zigzag in almost every pair from the high that we have in October 27 or a low that we have in October 27 on the dollar. That's, guys, the best I can see. I still see more weakness in the dollar. I'm sorry, more strength in the dollar to come. Now, let me show you Aussie. Let me show you Aussie. It's a very interesting, like I say, without bias, without forcing. In Aussie, from here, I see 1, 2, 3, 4, 5, 6, 7 swing. I wish and I hope everyone understands it. 1, 2, 3, A, B, and Z. A, B, C, W, S, A, B, C. This is what the best count I like in Aussie. Now, from there, you can see a clear three-way here. A small time frame. Let me put it to you like in an hour. Where you got 1, 2, 3, 4, 5, 6, 7. Not only that, this leg is a clear 1, 2, 3, 4, 5, 6, 7 swing. Yes or no? It's telling me that this is corrective. RSI, it gives you divergency from here. It gives you divergency from there. But from here now, where you got one swing, two swing, and then look, this leg is corrective. 3 ways. This leg, it looks corrective. 3 ways. And then 3 here. So maybe Aussie, it did a B-way triangle. That's why last night we say that either from here or from 105 is going to trade lower. And then maybe it did 1, 2, 3, 4, 5 to here, and then did A. No, it can't. Needs to be the triangle, needs to be from here when it comes, or from here when it comes. A, B, C, D. Let me see. A, B, C. No, it cannot be the triangle anymore. Let me see. Here. Here. 1, 2, 3. Right there cannot be a triangle. So technically it looks corrected to the downside. Maybe this is a 3-way move also. So it cannot be an irregular fly and regular wave B. But from here it looks like maybe it did A and then B, C. I mean, it can be the flat, but corrective. So that's why the combination on everything that I have been telling you guys is why I'm favoring like the risk is not, the risk is in the B way, in my opinion. That's why I'm favoring that. But still, I believe that we're going to get more, risk off, at least another leg, or least risk off before any significant bounce on the dollar. Any question now, guys? It's been like an hour 20, a very complicated seminar because don't believe the market is not that easy. What do you mean, a super nest to the downside? Like I say, it's possible. I mean, like I say, Isaac, contraction, yeah, but Aussie won't break to the downside if the euro is going to go to the upside and cable is going to go to the upside. Doesn't work like that. You know what I mean? Contractions on the market, they are very dangerous. When the market contracts, it's very, very dangerous because that means that a huge move can happen. Now, the case of the nest in the Aussie, no, the case of the nest that you say on the Aussie, but look, it's giving you divergency. You trading right here almost 100 pick lower and still you have divergence. I can show you. Let me see how much I can go back in the data. A very similar case in Aussie. Look, similar case in Aussie. And I remember me calling that one because of the same thing. When you see this in the RSI, it's a given. I can be wrong. Maybe I'm going to need to go. Let me go a little bit higher in time. The next, I don't know. Too many 3 right there. It doesn't let me. It was the previous wave 4. It was clear. I would say this. This is what I would say. Sell the risk, but with a mind. This is the strategy that anybody should follow. Sell 3 ways bounds in risk until prove you're wrong. But as far as you see 5 ways in 15 minutes from any low in risk, you guys should buy that swing because that can be a huge move. But I keep saying, you guys should sell the risk until prove you wrong. That's the message on the seminar. Better wait. You need to wait for the S&P before getting long risk. You guys need to wait for the S&P to make a low below the low that we have last week on the S&P. That's my humble opinion. You need to wait before going long risk. You need to wait from that low in the S&P to be breach it to the down, take it to the downside. That's my opinion. Any question, guys, about any pair? I think that we have. Yeah, dollar index, Michael, should go in the best of the case. Let me show you the dollar index. That's a great point you make. Yeah, I agree with you. I agree with you. I agree with you in that. 1 second. And listen, the easy part, in some degree, my friend, already gone, which was buying the dollar during this correction. Now, I think that still there is another leg in favor of the dollar. Let me show you this. And I mentioned it yesterday on the technical video. I hope you guys understand what I mean when I say that. This is the index. This is the dollar index. Right here. Like, this is how it is. Very simple. You have 1, 2, 3, 4, 5, A or ABC. Either one. Now, you have your proposal B already. Right? Now is the moment of truth. Why? Because now you got to take the fibber from here and you got to see what it is. Now, this is 5-way move from here already. So if this was a 3, Michael, guess what? He's going to do this. He's going to here, and he's going to say to the level that I've been saying, that was 78 minimum. And then from there, the dollar is going to be sold. Maybe there is when the Fed announced quarter to three index and number 3, whatever that thing is called. But that can be the case. Now, this is a great buy against this low, and I recommend that anybody to take it. Now, if you place the RSI, I think that this is what you're saying, that you're carrying divergency against this high. That can be wave 4. So, anybody guess what is the best trade on the market as of right now? And that's the one that I'm going to be doing it. That's the trade that I'm going to be doing later tonight. Me personally, is going back to the dollar index, put the dollar index in I use the 30-minute chart right here. Put the dollar index on the 30-minute chart. When I see a swing onto here, I'm going to sell the index with the minimum risk against whatever high we create. In other words, in the euro case, I'm going to buy the euro against whatever low is created after I see 5-way in 30-minute or 15-minute. You guys want to know why? Because if this is a 5-way swing, guess what? We're going to get a great retracement. Worst case scenario, I catch the B-way here. And then if I see corrective, I'm going to buy it back. You follow me? That's what I think. It can be like Isaac say and Michael say the same. It can be without a doubt. Without a doubt, it can be looking at the index only and looking at the index and looking at the dollar index, the euro. It can be laboring as a 5-way swing. I don't question that. Look, the high is the 1.236 on inverse Fibo, and now finally we have divergency on the high that before we didn't have it in this swing. That can be the case. Who knows? A trader needs to be a smart, guys, not a bias, a smart. So it needs to be seen. It needs to be seen. A low, you have to trade smart, and I believe that right now the better way is either sell right here with a 20-15 picks risk against whatever the high is created to catch either the big wave move or wait and see the dimension of the drop in the index and buys back against this low to a possible wave 3 of 3 or a possible wave C or C or Y, whatever. Any other question, guys? Yeah, that's the most logical one. I have to tend to agree with you. What do you mean, Isaac? Within this move? Yeah. I mean, if it's a wave 5, like you've been saying, minimum is there. Minimum is there. Now, 78.37 is getting interesting. And I'll tell you why. Because from here, if we go to 38.77, it's getting interesting. And I'll tell you why. Because then it's getting close to the invalidation of this being W. If it goes right there within, I don't know if you follow what I mean, if it goes right there within this being the wave 3. I'm sorry, the wave A. Let's say that you bearish, are you bullish risk, and you're expecting a 3-way move to the outside, right? And you go with a scenario that this is A, B, C, a B, and then it's going to do A, B, C. It needs to go to around 78, 60, 79 before dropping. The longer that this one is, the harder that this one is going to stay within the high. You know what I mean, right? I would rather see it dropping from here and buying here to the C wave. No, the first one is no picking, Muhammad. If you follow what I say is that you let the market finish whatever structure is doing. Like right now, this is the dollar. This is the dollar in the 5-minute chart. You can see a 1, 2, 1, 2, possible 3, 4, 5, and then when you see that the market, you trace a channel, that's fading a 5. I mean, that's not peaking. When you see that this channel is broken to the downside, around here, it does this, the test of the channel back, you set it down to see what happened. That's what I mean. It's like a buying the euro after 5 from the lows. Any question, guys? I hope that everything is clear. Thank you, Michael. We try, my friend. As you know, you look like a very experienced trader. This is not easy. This is not easy, to be honest with you. And we use correlation to define the risk and the move. And sometimes they are clearer than the other. But we still favoring the 3-way. But the dollar still, in my opinion, needs to be bought. All depends on the risk. Okay, guys, so let's leave it there. I'll get back to you guys later. Thank you.